Hi, this is Dave and welcome to the weekly market recap closing out the week for Friday, January the 10th, 2014. So I'm going to try to keep this video shorter than last week, and let's just jump into it. We're looking at the Dow futures on the daily chart. And essentially what we've had here is we've hit a high peak here, and we've essentially just been going sideways. We're trading around 16,000, just under 16,000, closing under 16,400. So I think the analysis hasn't really changed all that much. What I'm not sure of is, are we going to hold this 21 exponential moving average around 16,000? And let me just zoom in here a little bit. Question is, are we going to hold this exponential moving average here, the 21 around 16,284-ish to 250, and then push back off? But what I'd really like to see, the analysis hasn't really changed all that much. I'd really like to see a flush down into this zone to hold this swing high here, this breakout point into this zone here, and for the momentum to basically the stochastics to cycle back to the low side and then back up to the high side, and then this will be the area to get back in the market. MACD starting to roll over, so this is looking, we're still more bullish than bearish, but we've really just not been doing a lot over the last week or so. We've just been trading in this box here, and for that reason I'd really like to see a move outside of this range, either to the high side or the low side, to confirm which way the market wants to go. Typically when you have this kind of action here, you're building up energy in this area, and at some point you're going to get a directional move. Once the market has found equilibrium or found value, if you're a market profile type person, once you've built that distribution curve, you're going to make a directional move one way or the other. I'm not looking at this from a market profile standpoint. I'm just looking at it from the perspective that we're building this consolidation and we're going to break one way or the other. I'd like to see a breakdown to flush out so we can reload somewhere down here for swing trades. So I hope that makes sense. Let's take a look at the S&P. The S&P, same story. I'd like to see a reset of the momentum indicators and a push down into some deeper logical support levels. We might not get it. We don't know at this point in time. We're just going to have to look at it day by day. The Nasdaq, let me just extend this right. Nasdaq, same situation. We're just, we're doing the same sort of thing here, just below all-time highs. And let's take a look at the IWM, which tracks the Russell. And if you look at the IWM, what you can see is it looks like this area was the pullback, and now we're pushing back up to the high side, set to test and possibly break through that high. So that's what it looks like. We didn't really get much of a reset here in momentum, but you can see that the price action is telling us that it wants to go higher, for the simple fact that we pulled into logical support, and now we seem to be moving back to the high side. So the question is, are we going to break this high, or are we going to fail that high and then come back down into some deeper support levels like this one of these trend lines that are tracking the long-term trend of this market. So I think it would make more sense. Like, you could almost see a cyclical pattern in here. I'll be talking about cycles a little bit more going forward as I learn more, but you can almost see a cyclical pattern here where you've got, the timing almost looks the same, the distance of the cycles looks almost the same. So you would almost expect, this sort of action to happen, like happened here, where you went like this, here, came down, and now you're doing this sort of thing. You would expect this sort of action. I'd be more interested in reloading longs back down here from from my perspective and from my trading plan. That's what I'd be looking at. So let's move on to the transports. We seem to get the wrong symbol there. Okay, the transports. Okay, so this is here. We've got a major divergence here in. Okay, so from a Dow theory perspective, here are the transports. They've broken out to new all-time highs, closing on Friday, right? So we're here now at new all-time highs, ATHs. So this is a divergence over what the other indices are doing, and from a Dow theory perspective, this may be, giving us a heads up that the market is ready to move higher at some point here. So one of these, one is lagging, one is leading, but from a Dow theory perspective, you want to see the transports, for example, the transports and the Dow moving together. So we'll need a couple of days next week to see if the market is going to follow through and follow what the transports are doing, or if they're going to get that pullback that we'd like to see, which would make a more comfortable or safer entry. But we may not get it. This is something we got to keep an eye on. Transports are at all-time highs. They closed at new all-time highs. So this is a real, this is something we really need to watch in terms of what the indices are doing, and especially the Dow from a Dow theory perspective. So keep an eye on that. Keep an eye on the stock market and see if we get a break either way of that sort of tight range that we were talking about. Let's look at the dollar index. So the dollar index has just been flip-flopping. It is putting in higher lows. It is putting in higher lows in these areas here. And we did break for a couple of days above this key level of 80.86, and now we've closed just below that. So, the breakdance fight continues. I don't really have a lot to say on that. Let's take a look at the euro. Euro, same thing. We're still below $1.38, $1.3820 key resistance, and we've pulled back down into, close to this support level here that we've got on our chart, just above 135.23, and now we're into 136.83. We tested that to the high side and we found resistance there. So again, the breakdance fight continues. With the euro, you can see here it's kind of, from an indicator standpoint, it's sort of at a critical juncture here where we look like we may be getting a potential momentum shift, and we're testing the zero line on the MACD. So this will be interesting to see, where we're going to go from here. I think we're just going to, for the time being, we're just going to jump levels. The question is, which levels are we going to jump? We're going to jump between this level, this level, this level, this level, these key levels. The question just is are we going to jump higher, or are we going to jump lower with respect to those levels? So not a lot to talk about there. Let's take a look at some interesting markets. Let's look at the gold market. So if you look at the gold market, I think I missed this move, but I was looking at this key support level here. I was looking to establish a position, but I missed it in here, and then I missed this really quick pullback. You would have had to be really fast. I think this pullback happened, strangely enough, in a 1-minute bar. Like if you go down and drill into that day, the gold futures just spiked into that level and spiked off of it really, really quickly. It almost looked like a sort of a market manipulation stop run, for lack of a better description. But it pulled into that level, and now we're pushing back off to the high side. What I like about this market is we were in this downtrend, and then we couldn't get any lower here. We spiked a little bit lower than the low into this really key support level. Going back, if we zoom out the chart like we did last week, you can see that was a major support level going back in time. We put in sort of a double bottom here, and then we broke through this down channel here. So this is a really interesting move. And once you get a break of this, now it looks like we're going to break that swing point high and possibly get a move into this zone in here, 1272 to 1294, and if we really get things going, possibly 1324. So that looks really interesting. I think that this zone is in play. I think we're looking for at least a move into this zone, and possibly into, I'll just draw the box a little bit smaller, that zone. So I think that these are the zones or the levels that we may potentially get to. We have to be careful here because the The momentum on the slow stochastics is becoming, overbought. But having said that, it doesn't mean we can't go higher. So I think that this zone is in play, and we'll just have to see where we go. Obviously, we have to get above this challenge point. We closed right at that line in the sand, which was the high of, essentially the high of this bar here. We need to get above the high of that bar there, going back a few days. Let's see, that was Friday, Thursday, Wednesday, Tuesday, going back to last Monday. We need to get above that bar to really get anything, going for a move into this, these potential zones. So hope that makes sense. Let's take a look at silver. Silver, same sort of thing. We had this kind of flag or wedge or triangle, however you want to describe it, off of this low. We put in a sort of double bottom here. You can see we spiked below this low on this day, right on this day, but we didn't actually get anything going. And then we put a hammer to the downside. We didn't get anything going. And then we put in a bullish hammer off of the bottom there, and that sort of precipitated this this sort of choppy move back up to the high side. Excuse me. I think we've got a potential zone. Excuse me. We've got a potential zone up here that we could test between the 50 and the 618, measuring from this high to this low, and that looks like, that could be in play there. Let's take a look at the copper. Copper's coming off, so the markets are a little bit divergent here. Copper found some major resistance around 341, 341.23, and it looks like we may be getting a push back down into logical support, which would be extend right, this trend line here. So move into that trend line. We may have actually found a bottom right in here. If we can get a close above this bar, we may be able to push back off. But I think this is the logical support level closer to this trend line, which would take you around $3.25. Let's look at the natural gas. So natural gas pushed into, had a pretty decent pullback into this trend line. I don't know why this keeps moving, but I think this may be, this is an interesting level. We didn't hold $4.24, but we're into this $4.02 level, which is a major, which is another major support level. You can see here, this was the breakout. This was the breakout of this, this resistance here, and then we broke through it on some higher volume here. You can see we broke through on some higher volume. So I would expect that this level has been tested. So the question in my mind is this a good level to look at a look at getting in, because we've got momentum shifting down to the low side, which means we may actually get a cycle back up to the high side, and we're holding this MACD 0 line. So this is looking like an interesting level to me. I think we really need to give it another day or two to see if this is going to hold, and then we start pushing back up to the high side, and then we get above this trend line. So this area is looking really interesting to me, and it's, I'm looking to see if maybe we're going to get a possible long trade off of that area from my perspective. And let's take a look at the crude oil. So I like crude oil here. I like crude oil for the simple fact that we've come into a major support zone around $92 a barrel. We went a little bit lower here, but we couldn't get anything going. We couldn't get anything lower. We had a slight pickup in volume, but you can see here, this to me is a key low right here, and then we started pushing back above it. We didn't actually get a close. We didn't get a close above this bar here, but we did get price action above there, and then we came off, and then we closed right below it. So I really like crude oil here for a potential long trade, with the understanding that if we fail this the low of this bar here, that's where our risk is defined. If we fail the low of that bar there, then essentially, this trade isn't going to work. So I like a possible long trade off of here. This is what I'm looking at myself, but with a stop below $91.17, I think it doesn't make sense to really risk a move below that. The risk reward really makes sense here, because if this ends up being the low, we can get a pushback into, $95.30, $96.33, somewhere in this this zone up here, from this high to this low, somewhere up here in that zone. And in fact, let me just move these. Okay, that's probably more like it, into 95.30 to 96.33. And then essentially I like it also because momentum is basically oversold, and I look for a momentum shift back up to the high side, and I look for a move into that zone. That's what I'm looking at setting up. At this point in time, I think the risk reward, as I was mentioning, looks good. If we fail this low, then I'd personally just want to get out, because if we fail this low decisively, then essentially we've got quite a bit of room to the downside. Let me just zoom the chart out a little bit. If we fail that low, then we'd be looking at a move, probably down into retest these lows, which would come in around $86.61. So, if we can contain our risk here, but if that fails, then we could possibly take heat all the way down to 86.61. That's a little bit too much heat, and I think from that perspective, it wouldn't make sense anymore. So that's what I'm looking at in the crude oil. Let's look at the. I think we looked at most major markets. I forgot to look at the USDCAD when we were looking at the dollar and the euro and the other currencies. So basically, I've been talking about these long-term targets into 108 to 110 for quite a while. This kind of wide zone of 200 pips here. We came all the way into this level around 109.5. So we tagged it right in the middle of that zone. So it took an awfully long time to play out. At this point in time, it was basically a breakout of this this wedge pattern, and we were looking at potentially getting up here, and that has finally played out. It took us from, when did we break out? We broke out back in the end of November or the beginning of December, somewhere in that area. And, this has taken just over a month to play out. So it has done that. At this point in time, I'm not sure if we're going to go higher. Momentum is a little bit overbought here. I'm not sure if we're actually going to go higher from here, but, I think at this point in time, it makes sense to look at, possibly the market may be ready to pull back into some logical support levels around this 21 EMA and around this, this sort of accelerated trend line. Just going to reposition it here, somewhere into here. So that this has been interesting. It's been a long haul in this instrument. But if you look at, this is just pretty basic standard technical analysis that anyone can learn. We had this wedge pattern. We did a measured move off of the wedge here. This section of the wedge, we projected it off of the breakout, and that gave us a potential high side target of 108.8. And then if you look at, we did a Fibonacci extension from, I don't even remember where we did it from. I think we had a wide cut pattern. Yeah, we had a wide cut pattern going back, from this high down to these lows, back up to this high, and we projected the Fibonacci extensions off of, above the 100%, which was this high, around 104. So the 1272 came in around 1066, and the 1618 came in around 1094. And you had some levels coming together here, and that's essentially how we developed a potential target off of this pretty common pattern. Once you learn to recognize patterns, you can sort of, judge them and say, well, what, this looks more bullish than bearish. We're getting a breakout. Where could this market potentially go? And that's all we really did. It, just pretty basic technical analysis, but it took a long time to play out. So, but having said that, it's, this is why I love technical analysis. When it works, it's great. It doesn't always work, obviously, but this just gives us a look into what the market might be capable of doing, for lack of a better description. So let's move on to the bonds. And if we look at the bonds, we had a really big update on Friday. This is the 30-year bond. And the 30-year bond actually did find some support off of this move to the bottom of momentum, its oscillator range. And essentially we put in a double bottom and then we push back up to the high side. You know, all of these, you know, we've got some major support levels down here and it looks like they're intact. We had a big update on Friday. Last week we were talking about, you know, we weren't really sure. We did break out of this channel. We weren't really sure if we'd get a move back into these levels or not, or if we'd push lower. But essentially we did push higher, but this market wasn't all that clear to us last week. And now you can see here on the 10-year, we're pushing into, we held support at this 618. So we had a low in place, we had a high in place, and then we pulled into a 618 retracement, and now we're just breaking out of this down channel. So we could potentially come back up and retest these highs. I think that's possible. I don't think we need these fibs anymore, but we could essentially come back up and you know, retest these highs, or you know, if we wanted to look at where this market might go, we could look at, here's a high, here's a low. We could come all the way into 125.07 potentially. And, you know, but I don't really have a heck of a lot on this. It's just, let me go over to the 10-year, which is the 10-year interest rate. And essentially what we were looking at was, we were looking at this 3% interest rate in the 10-year, and that level did get defended and we sold off from that level. So this was the key. I think this was the key takeaway here that I was looking at was, you know, okay, are interest rates ready to go higher? Are they going to break $3 on the 10-year? This seems to be the key level. This is the key inflection point. And in fact, that level did not hold, and we failed that level. So it looks like we're going to continue in a lower interest rate environment as opposed to a high interest rate environment until and if we can get above, you know, this key level here, the 3 level. If we stay below it, then, you know, this is really the key inflection point to my thinking. So I'm going to wrap up this video. I hope that helps, and I hope I was concise on some of the analysis. If I can just summarize, there's really not a heck of a lot going on right now. The only markets that I'm really that interested in are the I guess the commodities. I'm interested in the gold market. Let me just jump back. Oops. Let me just flip back to the charts that I'm interested in. I'm interested in the gold market. We may have missed the move, but this looks like a pretty decent, you know, decent possibility that it's going to get up there. I don't know if the risk reward really makes sense anymore. So I like gold. I like crude oil off of this low, you know, understanding that the risk is the low of this bar here. And so I like crude oil, and I think I like natural gas here, you know, somewhere around this level. If we can get a break of this, if we could get a break of this bullish hammer candle bar, I think that's really where I would really like it. So, for example, if we hold this low and we get above the high of this, it's not quite a doji, it's more of a bullish hammer, I guess you would call it. It's more of a bullish hammer. So if we could get above this candlestick here on a closing basis, then I'd like natural gas back up to the high side for a retest of these highs, and potentially to see if we can put in a higher high in this market. So those are the only markets that I really like. I think the stock indices at this point in time, we really need to give them more time and see if they're going to pull back or if they're going to break out. So I hope that helps. I wish you again good trading and investing into 2014, since we're still at the beginning of the year. I know a lot of people are still just trying to get their feet, and good trading, good investing, and stay tuned for our next upcoming meeting. That'll be going out over the next 1 or 2 weeks, and we'll look forward to seeing you soon. So all the best. Bye for now.